talk about the charts, right? We haven't had a correction over 10% since I believe March of 2020, right? With a big V that happened. So, are we due for another big one?
Obviously, like I said this afternoon, saying that anything is due is a pretty dangerous territory to get into, right? That team's due to win a game, or a baseball player's got it. He's 0 for 20 and he's due for a hit. Especially when it comes to managing, and being responsible for our clients' assets and their net worth, making a decision based on, it's been so long, it's got to happen soon, is not a real practical approach. I would say the signs have been there, right? If we look back, and we saw the cracks in the foundation throughout 2021, but it was easy for your average investor to gloss over, because when they checked their statement at the end of the month, right? If you're in the S&P and you're just indexing, you're not out there involved in a lot of these individual stocks. It was a pretty basic year, not a lot of volatility. I mean, did we even have a 5% correction?
In the S&P?
Maybe 5%. Maybe like the NASDAQ had a 5%, but a very low volatile year. The last time we saw that was 2017. Two very, very different low volatility years, but the same kind of result for at least the S&P at the end. So is the market due? I would say, going back to those levels that Dave talked about, we talked about the Russell. The Russell has broken down. So if it's going to happen, we will start to see it unfold. The red flags have been there. The red flags continue to build. Now you're starting to see some of the strongest names kind of fall off a cliff one by one. Not to use dramatic terminology, but the big soldiers are kind of starting to fall. And it's what would happen. I would say if we were going to see a large correction, the things that would have to happen have started to happen. Now, could they reverse? Absolutely. We could be here in April with a totally different outlook.
Ian and I are probably two of the most positive people when it comes to, if you've been to enough of our presentations, you realize we're generally bullish, but that's because price is telling us to be bullish. And this is probably the most bearish, which means the most negative we've been.
I would say skeptical.
Skeptical in a long time.
Word, yeah.
We are willing to be wrong though, meaning that if we're above those levels on those previous slides, that thesis of a lower market is wrong. It's just a fact, right? If price is moving higher,
you don't sit there and
say, marry the bear market. I married my wife. I didn't marry my opinions. So that's the way we want to manage money, is that when we're above certain levels, we want to participate. Below, we don't.